Hello and a warm welcome to the Brickwork Ratings podcast on the Microfinance or the MFI segment as it is popularly known. I am Ramya Muraledharan, Head Financial Sector Ratings, Brickwork Ratings Limited. The podcast is divided into three sections. The first section will be on our assessment of the performance of the MFI segment over the past 12 to 15 months. The second segment will be on the regulatory developments in this segment, especially with regard to smaller MFIs. And the last section will be on our outlook for the segment going forward. Now coming to segment 1, which is our assessment of the performance of the MFI segment over the past 12 to 15 months. With the onset of the COVID-19 pandemic in early March 2020, many MFIs decided not to collect dues from customers. There was an expectation that, in turn, these MFIs would be given moratorium by their lenders, that is by banks and other larger NBFCs. However, moratorium from lenders did not materialize in all cases. As a result, many of the smaller MFIs faced liquidity issues. Additionally, given the unsecured nature of the MFI segment, securing further debt funding in an uncertain environment became a challenge, especially for smaller MFIs. Larger MFIs, which had earlier focused on growth by growing their customer base by venturing into newer geographies, focused on existing customers, as a result of which average ticket size per customer grew during FY21. As a result of all the above factors, the segment recorded one of its lowest ever growth rates in FY21. Now moving on to the segment 2, which is on the regulatory and other developments in this segment, especially with regard to smaller MFIs. The Reserve Bank of India, via its circular dated 5th May 2021, has decided to allow priority sector lending classification for fresh credit extended by small finance banks to registered NBFC MFIs that have a gross loan portfolio of up to Rs 500 crore. Additionally, the government on 28 June 2021 announced a credit guarantee scheme of Rs 7,500 crore to scheduled commercial banks for loans to MFIs for on-lending. We believe that the above schemes, especially the guarantee scheme, will improve access to credit for smaller MFIs. Now moving on to the third segment, which is the future outlook for the segment. In FY22, PAR 90 levels are expected to stay elevated at around 5.5 to 6% due to uncertainties over the pandemic situation in the country. The second wave, which hit during the start of FY22, impacted rural areas badly. Hence, the impact of the pandemic, along with the economic impact of many state-level lockdowns, may hamper the collection cycle, which has not reached pre-COVID levels even after improving in H2 FY21. Additionally, certain risks such as overlending, as evident from the high-ticket loan sizes, weather-related issues, and any further announcement on farm loan waivers may hamper asset quality. The developments in Assam, with the government announcing the Assam Microfinance Incentive and Relief Scheme 2021, may impact collections of entities operating in the state, as such schemes typically affect the credit discipline of borrowers as they stop repaying loans in the hope of blanket write-offs. As a result of the above factors, profitabilities of MFIs are expected to remain under pressure, owing to continued high credit costs. The RBI, in its consultative document on regulation of MFIs, released on 14 June 2021, proposed to link the maximum loan amount to an MFI borrower to her household income. In our view, the proposed regulation is a positive. This would eliminate over-indebtedness and multiple lending. However, in the absence of a common database on consumer household income, there may be consistent issues among lenders while computing household income. Further, the RBI consultative document also mentions the removal of cap on interest rates charged to the borrowers. In our view, the move is positive. This would create a level playing field and lower interest rates for borrowers. This concludes our podcast on the MFI sector. Thank you for listening in. Please reach out to the Investor and Media Contact cell as listed on the Brickwork Ratings website in case of any further queries.